Hello, everybody. This is Toad Sage and LigaM with Finding My Way. We're going to do an episode, season, what is it, six? Episode four and a half or five. We're going to see how many trades we got, what the quality is, if we're going to deem it a proper episode or an intermediate, because the market went pretty crazy. Um, Gapped up to an all-time high and stuff like that. And this week, if I had to be really particular, I would say newer traders shouldn't even trade it at all, or with a super long bias, sort of thing. Like they're very particular setups in all-time highs, gap ups, things like that. That I learned from BRT, continued learning from other people along the way as well. And so I think they can be really brutal. So that's the reason for the TBD on this episode number. And I think it's very I think it's very true. So we're gonna get into it. I think you're starting with which day was this? You said it got rid of your Friday, so this should be the
So,
Monday.
yeah, so we didn't, yeah, Friday was red for me. I don't think it was a huge red, but it was red. It was like whatever. But there was no, I don't have, well, we don't have the trade markers on here. We could recap Friday, but I don't have trade markers, so I'd have to look at the trade journal. Monday, I did not trade. I think we spoke about Monday. Monday, I did not trade. Monday was a weird day, and I just did not feel like taking a trade. I don't know if it was because it was choppy or what, but it was definitely a psychological type day where I was just like, nothing really was lining up. So I did not trade on Monday. So I
Hmm.
believe
Hmm.
this was Friday right here, so we don't see any trade markers, but we have this weird jump up here. But you can see like, God, starting that Friday into last week was just constant up. Here was Monday the 27th, and same thing. We just kind of grinded up, and I think that's why I didn't take any trades. It could have been because of Friday too, being like red on Friday kind of threw me a little psychological wrench, but I took the day off Monday. So that brings us to Tuesday. So this past Tuesday was my only green day this week, and it was good.
Okay,
It was a good day. And I think I only took two trades on Tuesday. Whoa, where did we go
that's
here?
great. That's great to hear. All right, so only two. Let's see them. That's great. I like to hear. When somebody says that confidently, it's probably decent trades
Yeah.
or bad trades, and you knew to cut it.
Yeah. So one
So,
thing, and you mentioned it too, like this is probably not a good week to trade. Like we had all-time high trading plus like FOMC plus just all the shenanigans going on, gap up. We had all the shenanigans this week. Like we probably had every bad thing to go against like newer traders this week, and I still traded. And I also sized up this week a little bit. Um, I went up one contract on the top end, so that probably hurt me in the long run.
mm,
Because you and I were talking about it, and I was like, well, I don't want to go to five. I probably should have stuck at three this week or two, and I went to four.
yeah, I wish I thought about that actually while you were. And I didn't. I know I said that to you, and then this gap up happened. But I was already not trading much and focusing on um my job.
Hmm. No, yeah,
And
it's listen, it's both of us because even I should have known. Like I should have known right as soon as we were like, oh yeah, it's all-time high trading. It's tough. It's FOMC. It's tough. Like I should have cut my position sizing in half on my losses this week would have been much nicer.
mhm.
Right just from that, right? Even if I was still red this week, it would have been half. But it's fine. I mean, we learn from those mistakes. But all right. So here's Tuesday. So Tuesday I took a after 9:30 trade. There was no morning trades for me. I don't know if it was just because I didn't see anything or but here's Tuesday. This is the 1 minute chart. And we started going into lower highs and lower lows. So we had this one and then we came up and we had a I saw this right away and I saw us dip back down. And I
Hmm.
believe this trade, I actually said to myself, I saw it tap the 100 EMA. I'm starting to trying to look at my MAs a little bit more, and it came down, tapped it, went back up, and then right here is where I took a trade at 52. So basically almost dead middle, a little bit on the top end of the candle. I went in full bore. I probably also saw that the 10 was curving down. This is on the 1 minute. I'll definitely look at the five for the other indicators because the 5 minute obviously holds its value a little bit more. But we crossed here a little bit right before this. So we crossed here. So
Hmm.
about 3 minutes before we crossed on the 1 minute, and then right about somewhere between this candle and this candle, we went under the 50 on the RSI.
Hmm.
So we had one,
Let's
two,
see.
three, and we went in here 52. So and then I let this run to my 20 points. And we exited at 20 points here with two contracts. And then I held two until 49, which so I took two at 32, just like it should be. I was actually a quarter point off, but took two at 20. And then I started moving my stop up a little bit. And I think I started to see this bottom out here. And I may have said it in chat, and I cut it when it started to come back up against me. I didn't want to lose too many points here. So, or I may have even set my stop
Okay.
just below a few points, like Semper suggested, to make sure that I don't, lose fees or whatever. So this
Yeah.
was a full two contract, 20 points, and then the other two contracts, I only got a few points on. So this was the first trade for the day. So it
Okay.
wasn't a, top end really amazing trade, but
Yeah.
it worked.
Yeah. Let me look at this for a moment. What that was. Okay, that's I have the 2 minute there. That's why.
So this is
That looks weird.
1 minute 950 is my entry.
Okay. Let me refresh a bunch of stuff. One. You said what was that entry again?
9:50 a.m. It was on the 1 minute candle.
950. Yeah,
Yeah.
there it is. Okay, I'm zooming in on mine. Um, take a look here to see what would have been available. And then yeah, there's that rip up, pull back down, green candle. Okay, so I feel you're okay. Hmm. What do you think about this trade so far?
So
Like, why do you think
I
so you got 20, which is cool. You took half. Okay.
right.
What
I think in my head initially when I first took this trade, I saw the structure change, and we went from
yeah.
going in an upward trend on 1 minute here, and we flipped flopped around, and we created a lower high. And I saw it starting to dump down. We theoretically broke structure here.
Um
Right?
I mean, yeah, let me see.
Sort
My
of.
thing's blue. Get the yellow on.
Yeah, I'm gonna
You
zoom this
got
out a bit.
you got this here, this one here, this one here. Yeah, I mean, not the best. I do like the break of this candle. Um, and then yeah, that's pretty good. I mean, this is the 930. Let's get rid of this is the 930. So if I'm imagining watching this, um, this pump makes sense. I'm usually long scalp. I think on average the market usually goes up on open. Um, all right, so we get this. I would have had, doing my 2 minute, I would have had to stop there just based on the two consecutive green candles. That's usually what I'm doing. It depends on the time frame, but that I'm watching the two candles. Um, it can be three, but I like to use two greens no matter
Hmm.
where the greens are. So here, right, it would be once this candle just gets over this high, my stop is going here. Um,
Okay.
as soon as it just gets over it, my stop is going. I do this on different time frames, but that's on the one. And then once this green forms, I'm looking at this one. My stop is there. Once this green forms, I'm here, right?
Gotcha.
If they're too tiny, I'm a little uncertain about that. But like, if you look here, like this one here, all the way at the top of this little peak. And then if you pick the last significant one, you see that breaking that actually did turn the trend around for a little bit. So that's why I think you might want to take those into consideration along with the structure break,
Hmm.
um, because this right here, this low, yeah, it's like, was that a structure break? Yeah, a shittier one because it's on the 1 minute, but that's how it is on the 1 minute. And then, all right, but really this broke as well, right? So then what I'm looking at is um these. So right, so now I'm looking at the second red, and do you see how that gets respected?
Yep.
And so that's why I'm not saying to perfectly adopt my system here, but pay attention to it and see if you like it
Yeah,
because it's
because
pure price
I could have
action.
went in right here instead of, I don't know why I was so late here. Not sure if I was
Yes.
because I was looking for confirmation or something, but I think, I mean, even if I followed this to a T in terms of confirmation, I could have entered here.
Um,
Um,
yeah, I would say the problem is that I was trying to find is if you thought this was a structure break, did you fib this out? You know, and
right.
if you did not, you should have,
Okay.
because at least at least use something price action. So with something that's pure price action, um, that is consistent and systematic. I don't think systematic trading is exactly profitable and great. Um, 1 second. Um, all right, so yeah, one thing I don't think mechanical trading is I'm whatever. We don't trade mechanically, so there's no point in giving my opinion on that. We trade discretionarily. We're combining things, multiple things, to give ourselves an edge based on our intuition. You got the MAs, MACD, RSI, fibs, right? So, but the thing about the fibs is if you're looking at structure, you have something at least somewhat mechanical to confirm everything. Um, and that is the same thing with my two candle thing. So here's what I do if I'm looking at this two candle thing that I use on the regular and I do like it is as soon as as soon as these two candles lose it, I'm looking at the most recent two reds, and they don't have to be consecutive, like I said over
Right.
here, right? It's just the last one. So now what I do after I see a two break, I look for the two retrace to come really close,
Okay.
but not exactly break it. And so that for me is how I know and you could also say if Semper were here, you already know what this is. That's an
Yeah.
imbalance,
Yeah, then a balance there. Yep.
right?
It wants to come up and fill it.
Yeah. And they don't always fill, just
Right.
like my two candle doesn't always get retraced, just like sometimes it breaks, just like sometimes this scams and then scam, 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 nothing's a scam. All right, but I mean sometimes the market is literally trying to trick people, but um just like this sometimes gets tricked, just like, plenty of things, but ultimately they at least have some edge. So yeah, I think whether you're doing, I give you the two candle thing in case you want to try it out.
Okay.
But if you're not, then I think you should have fibbed this. So you got the golden pocket. Which one is that? This is the 2-3. This is the pocket.
Yeah. One here. One, two, three. I could change the colors if you want.
No, it's not that. I can't actually. Which one's the 100? Oh, there's right.
Oh
It's
yeah,
it's
it's
it's that
meshed.
they're
Yeah.
a little above. That's the only, it's they're not actually to the left. So that means yeah, this is the pocket. Um
Can't actually.
yeah,
Okay.
right?
Yeah.
Like it looks
I'm like, how do I get this to go on the right? There's a way to get it on the right hand side, for sure. It's like it's in here somewhere.
okay. No worries. Oh yeah, there it is. So labels, I like to do left middle actually, or what do I do? Let me do my fib.
Oh,
Oh,
left
I
middle.
do right. I
Oh,
do
okay.
right.
I was say right. Yeah, yeah, yeah. So you
And
can
then
just do
and
the.
then on the middle is where I put them because it actually does it. Maybe you like it, maybe you don't. It's your fib, but now they're actually on the line.
I see what you're saying. Yeah.
So yeah, all right. So there's your pocket. Um,
And it did. It literally
where
came right back up to 236.
yeah. So everybody and their brother knows about the fibs and that the 236 is the stop. So what the way I like to think about it is these some of these mechanical things have edge, but the more people that know about it, the more likely it's going to get tricked because
Right.
that edge will disappear because there are too many herds of sheep trying to be there, and the market's going to hunt them. The market does not hunt individual stop. Like I could be wrong about that, right? I don't like to speak in certainties, but it does hunt groups. So
Right.
this right here is a structure break that was a structure break, right? But it was a tricky one. So if you fib it out, maybe expect it to come back here. Expect it to respect but come back here. It's like this two bar stop. Like I think it's legit, but even that, it's like I expect it the first time to come all the way close. So I don't know. Point is, maybe that's a little too nuanced reverse psychology stuff. But point is, you had the GP, and yes, it violated the GP, and yes, if if I were trading this, I would have entered on maybe this candle and maybe took a stop. All right, but you know that I usually have a 10, 12 point stop. So I don't care. And then I would have waited for another candle, and maybe if I was on my game, I would have entered on this candle, and then this candle would not have gotten stopped. I mean, hopefully not, but maybe. And then ultimately could have rode this move down. And it's like, okay, so maybe you don't quite catch that, right? And then it's like you
Hmm.
see the structure break, and that's fine because technically this is the confirmation, the lower high. You get a lower low, you got the higher low, higher low, higher high, then you get a lower low. And this is technically the confirmational lower high. All right, you got but the RSI is still kind of fighting. I mean, it's still above the 50. The RSI above and below the 50 is actually I don't really care too much personally about the where exactly the RSI is. Um I think let me actually check something. I think the overbought and oversold. The stats actually, and I almost don't even want to say this online, but the stats show that when a candle closes in the overbought or oversold, that actually it's more likely to continue than stop.
Hmm. Okay.
So that's the stats for the last 3 years. So I never used overbought and oversold unless it's been multiple candles.
Yeah.
And even then, you can get the finally it cracks like here, right? You get
Hmm.
RSI divergence, you get the divergence here, you get the increasing price. Finally, it cracks, it hits the 50, and then it just bounces, and then it goes even higher.
Yep.
So it's like the RSI is a show of relative strength, and the point is, if it's getting all the way into the overbought, that means there's a lot of strength. So it's like shouldn't be fighting that strength. Although the divergence is, it's like if you're a divergence player, you can like average into divergence, I guess, but that's not my strat. So, point is
Yeah.
above and below the 50, and I wish you had an average line. Let me actually see. Although I
Yeah.
don't really use the, now that I think about it, I don't really love the average line. I think you literally don't have it. Oh, no, you do. So I use that. I don't know if you want to use that. You can try it out.
Okay.
I use that and I use that, yeah, on the 14, just like I use it stock. But one thing to keep in mind is I do think that can be tough on the 1 minute.
Yeah.
Um, and it can be tough on the 5 minute. I actually like it on the 15.
Okay.
So I think it's really, really awesome on the 15. Like if price goes under the average on the 15, I'm considering that the trend may have full reversed.
Let's go.
Um,
That was Tuesday, right? Yeah, go to Tuesday. Here we are on Tuesday, which doesn't look great because this everything is so fucking big here, but it's all right. So we did go under the average here, but it was not during that trade. We were still
okay.
above. We were still above.
Yeah, exactly. And then even this is, I mean, it eventually came back under. But what I'm also making sure I watch is also the 50.
Right.
Right. So yeah, we got under the average, but and actually getting under the average was on this candle. That bar did at least follow through. That's
Yeah.
great. But at that point, it's like we're still above the 50.
Yep.
So yeah, and then so yeah, overall, I think yeah, you were late and you should have fibbed out the first and I what I suppose I'm wondering is while you were looking at that um while you were looking at that, did you notice the was this Tuesday? Yeah. Did you notice and call this structure break? Well, when it happened. On the 1 minute, oh yeah, do you not use two charts at the same time?
No, no, you were talking about this last week. I was a little bit this week, but it was I should get into the habit of it.
It's really good. Yeah, I do
Yeah.
think I do think it's
Yeah.
really
I
good.
had
That's
it up.
actually
I actually may have turned it off because I went to go check it on my phone. And then when you get two charts on your phone, it's like,
yeah, so I've
what am
got
I
a
what am I looking at?
right. I've got a mobile I got a mobile on my phone, but the problem with TradingView is that whatever chart you last opened will be the one it opens on your phone.
Yeah.
So I've got a mobile one, but then I every time I get on, I go to my chart layouts and I load the mobile.
Yeah.
So maybe that's a little bit of a tip for execution, but now we got it back. Um,
Where the hell are we?
where are,
We went too
oh,
far.
you're at the 20. Yeah.
I
Gone
hit
too far.
27 and I didn't see any marks though. I was like, where did this go? 5:30. Here we go.
There we go. All right. So yeah, point is, if you identified this structure break, you should have fibbed this bad boy out. And
Yep.
I guess the tough part, oh man, is that if you're like, oh, I got the bear hammer off the GP, I'm gonna enter right here at 260 or 060, it would have literally just tapped you out.
Yeah.
So it's like that's that's the tough part. It's like I want to say and encourage you to try to drop it to a 10-point stop, right? But I don't want to I think your week one was a solid consider, and then not too bad for the first week. Week two was better. Week three was solid. I think week four you finally went green on the account, up more than a few hundred, and now this is technically week five. Um, and it's you're finally getting one red week, but it was during FOMC, one of the hardest. I mean, FOMC and all time high, wasn't it FOMC Tuesday?
Yeah, it was FOMC all-time high, and then you said gap up too was also a contributing factor.
Yeah, exactly. The FOMC to gap up the
So,
all-time
and I
high.
think what's his Semper was saying also that I don't know how true it is, but the 28th is the most bullish day of the year or something.
That's a numerology thing.
Okay. So
So
like
take it if you want, if you believe.
yeah, I think I had everything against me this week. Not saying that I didn't make good decisions this week. I definitely broke rules, didn't follow
Right.
things. Like I'm gonna be totally humble about it. But
Yeah, it is what it is.
I was climbing Mount Everest this week as well. So
Yeah, for sure. And I think that well, that might have been the biggest psychology thing is like why not
yeah, and you'll
just
see some of my
skip
other
the whole
my
week?
some of my red trades I got really like I think one of my trades I got stopped out to the point. Like the wick was
Yeah.
like literally to the point. I was just like, "Are you fucking kidding me?" Like,
Yeah.
so and I don't get mad, but I
Right.
definitely was like, "All right, I'm gonna get up and go get a coffee."
All right. Sometimes lucky, sometimes not. I remember one time I was taking a trade during non-farm payrolls. I love non-farm payrolls, but non-farm payroll I actually make consistent money on. And I read those comments that are like, nobody's making money trading non-farm payrolls. Just trade the regular day. And I'm like, I make money on non-farm. And sometimes lucky because I remember during this non-farm. I had some resting orders and price literally went like that and tapped my top order. And I'm like, sometimes lucky, all right, and then sometimes unlucky. Like it's sometimes it gets you out to the tick and sometimes it stops you out to the tick.
Yep.
So,
Yep.
but yeah, I think I would recommend either um moving I think because so you said you had worse trades, and I
Yeah.
would definitely want to get into those. I should stop ranting on about this one.
This is my only
Um,
green day, so these are the green ones we'll look. I mean, I had green
right.
trades, but this is my only green day, so
Okay.
these are the ones, and this obviously was not a great one, but it was it
Hmm.
it, it was serviceable to say the least, right? And then I
Yeah.
think I was still sitting in the chair, and I saw it following
Hmm.
this pattern, and we picked
Yeah.
another one up here. This one is much better in my opinion. Um, I saw this come up and once again retest, and believe I'm. This past week, I found myself looking at the MAs a lot more and trying to follow them a lot more. Just because we had a lot of continuation trading going on, like especially obviously going up. So I started following that, and I told you I'm trying to fib more too, although I second guess my fibs a lot. But um, I saw this coming down and then do the bounce again, right? And I saw this come up and I took this at 46. So I mean, I got this, pretty high in here. I took this up here and yeah, it was a good one. I hit my 20 points on this candle at 27, so it's towards the bottom.
Yeah.
Probably 27 and a half, which right here. We're literally almost at the bottom of the candle close. And then I let it run. And then I remember manually moving my stop. I think this trade I was saying that I was manually moving my stop to a trailing, almost like a trailing stop where it was 10 points. So we got to a point where I could have closed out the other two, but we just missed the next 20. This candle right here, its low was 0850, so I would have so I came back up and we took it at 34. So I lost a little bit, but I didn't go all the way back up either. I still got 12 points on the other two contracts. So this was my second trade for the day, and that's when I called it for the day.
Hmm. Okay. So here's all right, that makes sense. This one also you happen to let's see, that's 60, that's 40, that's 50, that's
You want me to fib
46
this? I'll fib it
right
backwards. Want me to
here.
backwards fib this?
Uh, doesn't matter. Yeah. Well, actually, yeah. If you always fib, however you fib, whether it's left to right, right to left, inverse, whatever, you want the extensions in your direction. So whatever way you fib, that's preference, whatever.
Yeah.
But you want the extensions. You want the extensions in the direction of the new trend.
I see what you're saying. Okay, so if you're going down, you want to come down with
Yeah.
them, regardless if you're, I don't know. Okay, you're my
So
preference.
like if you're fibbing out this green leg. you want the 161 up here, not down here, because it's a target.
I got you. Okay, so this
Yeah.
would be. Ooh, nope,
So
that's
you
fine. Yeah,
Yeah, so
yeah,
that's why the whole right to left to right. You can change your fib. It really doesn't matter what you do. I mean, you can draw them however you want to do it.
yeah.
This is people call this the difference between this right to left and left to right. I don't know why. It's because like if you're fibbing the way I fit, right? So let's say I'm fibbing out this leg and I want to go higher for some reason, I would click this and then I would fib from right to left and then it would give me my extension, right? But it's like that doesn't really matter because if you're a it's like the left to right, it doesn't matter because on the x-axis. But the point is you want the extension in that way. So yeah, so unless I think you can reverse your fib. I mean, is this how you like to draw them?
I That's the thing. I'm not a pro of drawing. Remember, fibs. I was not. I wouldn't say I wasn't against them, but I was
You
not a.
can,
I was not incorporating them when we first started. Remember, I was just kind of like
right,
it's a lot of extra things to know and remember, and
right.
I already
Yeah.
had a whole bunch of things I needed to kind of look and like get a
Uh-huh.
feel for. So that's why now in the last couple of weeks I've been trying to draw them a little bit more. But in terms of like my skills of drawing them, when to draw them,
Hmm.
like
Yeah.
understanding the levels and the pocket and everything,
Hmm.
I'm still trying to get that down. So if you
Okay.
tell me what you want me
I
to
mean,
do,
if
I'm gonna
you
follow whatever you say. That's not.
Well, yeah, it's literally just how you want to draw them. So it's like if you like clicking, like all right, when you see a bullet, or you're kind of I guess have a bearish narrative. All right, so if you let's say you see this structure break, right, or you see this structure break, you see one of these structure breaks. It's
Hmm.
like what do you want to do? Do you want to click on the top and then the bottom, or do you want to click on the bottom and then the top? So that's literally preference.
I'd
It doesn't
probably
matter.
follow that. I'd probably think in my head I probably would want to follow it. So
So, okay, so keep them reversed. That's cool. And the point is, you want the extensions down here. That's all that really matters.
yep.
It doesn't really matter if you draw them left to right, right to left, or whatever at all. As long as your extensions. Because I bet if you fib this out, I bet this is the 1618. Um, and then I've got some secret fib levels. I'll send you my fib template.
Hmm.
All right, so yeah, point is, and then I'll stop. We can stop harping on this day. I think right here you've got multiple things that you could have said this is an imbalance, so I want to fill this. You could have fibbed it out and waited to get into the GP, which would have had one loss, yes, but it's like you could have just, matter of fact, even if you took the full 20 loss to the tick and then you got back in down here at 75, you actually would have made 40 profit, 45 profit. So it's like even that loss would have been fine, taking this loss, even though it was annoying. And that's why I use a tight stop because I want to not care when I get stopped out. I want to be able to just enter again and again and it be
Hmm.
fine. Now, not more than three times in a row, but all right. So, and then you have the two bar thing I mentioned. All right. So any of those, whether it's the fib, the imbalance, or the two bar, any of those could have gotten you a good entry up here. All right, and then if you don't have that, then fibbing out this leg, um, think think I bet this is probably in the pocket. And the tough part is you don't want to just throw a blind order. You don't exactly want to do that, but you can really pay attention to it. And ultimately, if this also has the two bar and it's got the imbalance, and the imbalance didn't even get touched, and the two bar didn't get touched, and it was too quick for a GP. So I think I don't know. I think this here if you saw this structure break and you called this a structure break, don't be afraid to take it. Like use a price action tool, whether it's the two bar, the imbalance, or the fib,
Hmm.
and take that one. Because by the time you wait all the way for the second leg to play out, like the second leg is the best leg. You don't really want to be getting in on the third leg for your first trade of the day. And
Okay.
that's what this was. Um, if you want to try the third leg, it's like then you've got to learn when to short the close of a green candle, as long as it's in a red leg. As long as the context is red, you can short a green candle. Although sometimes, it can just keep going. But ultimately, when you think you see the price action break, don't wait. Use one of the tools, one of the three tools, um, and get that done. Because ultimately, I mean, this was a structure break long. So we can look at that real quick. This was a structure is it lower low, all right, boom, higher high, F everyone. All right, and then the structure's down here. All right, and then this is now a lower high. Although honestly, when you see this, you know, when you see this junk, this is like kind of throw the structure out the window.
Yeah.
Because once this happens, consolidating back and forth for 5, 10, 15, nearly 20 minutes, this is at this point a total pendant. Somebody might call it a bear flag, and this isn't a bear flag. I didn't pass my candle pattern class, all right, so I don't know if this is a bear flag or what. I mean a
Mm.
bull flag. I think a bull flag is supposed to continue higher. I don't know. So, but point is, too long of a consolidation. All right, so the structure goes out the window, but then ultimately it did come back down to this lower low. All right, so then the tough part is what is the leg? Because you want to fib out the leg that breaks the structure. All right, so you got the lower low here, and you got the higher high here. Is this the fib? I don't know. Let's throw the fib on and see how it interacted. I mean, mm, it's a little close. I don't love it. But then here's I think a good tip, but you can see how it works out for you is that try fib, try making this the top of the fib, this candle here. Because I would say that's a little better. At least it hits the 50. At least it hits the 50 because when you see stuff like this and then eventually you finally get a well-defined leg, I want to fib the well-defined leg.
Mm.
Whether it's and ultimately it's like here we're holding this trend line and where did we break that trend line? Started here. So it's like somewhere in this area is the top of the well-defined leg. All right, so that would have still worked. Um
Thinking about this too, I remember looking at
um
this doji right here.
yes, yeah, yeah, return.
So I believe when I had taken this, I was looking for this to fight this, and it wicked
Uh-huh.
a liquidity sweeps, I guess you could say, in a small version,
Hmm.
right? Because we're on 1 minute.
Yeah.
Um, and I took it, and then I believe when I took it, I tried to get it as high because I kept telling you last week, like my entries were late, early, blah blah blah. I was trying to get my
Hmm.
entry to be better, um, and I took it, and I got it pretty high. I mean, I got it in the wick, which is good, which is better. And I saw this come up, and that's when my confidence level probably went through the roof, and I was like, yeah, we're gonna, and we did.
Yeah, I
Um,
think that's beautiful. The wait for the bear hammer at your level. That's gorgeous. I think that's great. Something Semper told me a lot during my finding my way is to put your order as a stop market one tick below the doji, and that the ideal entry is that it has to follow through after breaking that candle. But that seemed really advanced to me, and I actually never got more into it. So I'm just mentioning it if it resonates and
okay.
you start watching it. Um, Next tight. So yeah, you waited for the doji. You got the hammer, and that's another thing about the hammers is I really I guess this actually may have kept me out of this trade because there were two competing hammers close together. I don't like that
Yep.
when they're too close together, and I don't like it either when they are like not really at a high. Like this isn't really a high, this hammer. Like yeah, these hammers, I never take a hammer at the top, obviously. But then here are these that get kind of like tricked out, but then ultimately they work. And then here is lost my pencil. Here's a hammer with a competing hammer, and then another hammer. So it's like the hammer's on everything, but it's like the wick. The wick
Yeah,
is what's important.
right.
Um,
And we're also on the 1 minute, so like this is a lot of
yeah, there's a lot
jitter.
of
I'm definitely trying to get my. I'm going back and forth. Like I've been hanging out on the 1 minute a lot for entries and exits, but I still sit on the five a lot.
yeah,
And I've been trying to size up to the 15 and the 30 a lot more too. Just because it obviously they do make a lot more sense in terms of overall, you know, this
right,
stuff. Look, I'm trying to find like hammers and engulfing patterns on the higher time frames, just because, like you said, you get a lot of hammers in here, and it's like, well, what the hell am I following? Like, where are we going?
right, yeah. I mean, yeah, that is can be tough. Um, Looking at all the structure and stuff, I definitely think that could be pretty tough because then it gets like confusing. Um, yeah, and you wanna, I mean, that's part of why I use the two bar. So I mean, I'm looking at a screen like this, and generally, and I've got the five here, we got the 15, I've got the two or the one, and I've got the 60. And on each chart, I am actually tracking the two bar with a line that I move up, right? So while the 15 two bar is long, I'm only looking for long 5 minutes and 2 minutes, right? And then if the 15 gets broken, I'm looking for a retrace to the five.
Yep.
So stuff like that. And I think stuff like that will give you some grounding within the complexity of looking at multiple things. But whatever you do, I'd highly recommend you try looking at two charts, the five and the one, or just the five. Like if you're gonna cut one out, forget the one.
Yep.
And look for big wicks and retracement to the wicks and stuff on the five.
Okay.
Um, so I think that's probably I think we probably call it on looking at this day. And out of everything I said, so I mean there were three major points or one major point really. When you see the structure break, use one of your price action tools, whether it's a fib, waiting for the imbalance, or the two bar. When you see
Okay.
the structure break, you got to use one of those price action tools because it'll add consistency to your trading. And second major point, the third leg often sucks, so be wary of the third leg. You got to recognize that structure change and catch the second leg. Um, and Yeah, that's it. So price action tool that, and then the biggest lesson actually is don't even trade the morning of FOMC, honestly, unless it's on a sim.
Yeah, this was Tuesday, so I think it was FOMC was Wednesday, wasn't it?
Oh, okay, all right. So okay, fair
Oh,
enough.
you'll see because Wednesday is a good one. Um, yeah. All right, so Tuesday. So this was the only these are only two on Tuesday. And then we move and we're gonna go to Wednesday the 29th. And here we
Okay.
are. Look at Wednesday.
Oh, okay. When I was actually opening up my notes here to record what I said here, and then I looked over and I saw that finding my way six, four question mark point five. All right, notes. Um, Tuesday.
Just like Wednesday. Just curious.
Tuesday was use price action tools upon good spotting. Um, Third leg sucks. Okay, all right. Now here we are. Because I want to start compiling these, especially now that I'm going to have more time. I want to start way more focusing on the systematization or whatever.
Yep.
So,
So here's Wednesday, where I just put us over to the 5 minute chart real quick.
hmm
I just wanted because I wanted to see what was going on here,
like
but I'm pretty sure I was
market got diddled on Wednesday. It looks like.
market was yeah, this was
What's
Wednesday.
happening? Let me get over to the Wednesday on my chart so I can see what's going on. And now it's like, let me actually look at I should be looking at my EMA charts. I'll do that. I'll look at my, what's happening? White, looks good. Canvas, top 15, awesome. Okay, Tuesday, let's look at Tuesday, or I mean Wednesday. Oops. Um, what were my EMAs? Yeah, kind of bullish, but not great.
Yeah, this was a chop, sort of. Started
Uh-huh.
weird day. And I've come to find that I do not do well in chop.
Yeah. Nobody, yeah.
Nobody does
Right,
well in chop, but certain people do well in chop. I'm not going to mention their names. But yes,
right.
uh, the chop just chops me.
Uh-huh.
Um, yeah, I don't know. So this was another one of those like looking at structure. We started doing the lower high, lower low, lower high again, and then I think I was looking for the let's go down further here. Um, I took it at 61.50, so middle of the candle
Right.
roughly, and my stop was 61.80.50. So I must have not come anywhere near. Yeah, this just kind of went sideways. And I probably should have recognized that it was going sideways because we came up and we created a new higher high. And
Right.
then we created an equal high. And then we created an equal low, sort of. So I'm not even sure what this was, but I
Yeah.
got stopped out here. We went in with three. We didn't do four, so this was obviously not a super confident trade. And I got stopped out at 61.80, which I believe. No, yeah, I didn't get too big. I mean, regardless, I was gonna get stopped out anyway, but 61.80 was somewhere up here. So yeah, this was a generalized just bad trade.
Yeah.
Not to say that I see the other ones are any better, but this was a very yeah.
Right. All right, I'll talk about a couple things. I think this is like, I almost don't even want to look at these trades because I think looking at losses on days that really should not have been traded is bad for psychology.
Okay.
Um, like this buy, um, at 291 right there, this buy right here.
Yep.
I think that's a decent buy. I mean, it's a little, uh,
Was that early, right?
uh, no. I mean, yeah, you can, I mean, you can say early, everybody says don't catch a knife, but it's only a knife until you get the proper signals. Um, that's what time was that? 10:03 on
Yeah.
Wednesday, right?
10
Why am I?
10:05 on Wednesday. It says.
Okay. Yeah. I mean, and if you put it on the 5 minute, this and don't, right? Because we'll have to swap everything.
Yeah.
But if you put this on the 5 minute, this actually looks like a decent little defined leg, actually. What it actually looks like in the 5 minute is this what candle is this? Not 8:45. You're an hour.
No,
Are
I'm
you an
seeing
hour different? Eight for
nope.
what am I tripping? All the way 9:57. Oh, I just can't even see it because yes, that's 9:30. All right, yeah, 9:30. Yeah, so the 1 minute, all right, so there was a candle all the way at 8:45 a.m. that opened at 2:46. So there's a candle that opened somewhere around here. And then the open retested it. But actually on the 5 minute, this whole thing all the way to that candle looks like one nice leg. On the 5 minute, it actually looks decent. It looks a little trappy, but it looks decent. And then this is about in the 50 in the pocket. Um, and then
See what this is doing. I'm just
ultimately,
curious.
yeah, so yeah, that's a great, yeah, definitely.
So I probably fought some trend thing here a little bit.
Yeah, and it's like really this was a long actually. Like it's just like you see this pop here. Um, yeah. Oh, what about this? Did we cover this short?
No, but I
Um,
mean, not great.
yeah. It's like when
We
when
could
when
we could cover it. This is not great.
yeah, no, so this is psychology. So this episode should be about psychology. And if I can cover, this episode is long already, but that's okay. Um, if I can cover psychology correctly, um, then it'll be episode 5, right? And Semper is really good at market psychology. I think I can explain perfectly well personal psychology, but Semper's really good at market psychology. But we will um, look at for a moment. Can you do tabs on this Project X? 'Cause that could actually be your solution to looking at things. But I wanted to see the daily, but it's no big deal.
I'm gonna do another tab on here.
Can you? I mean, I
I
have
mean, I
never
could do whatever
used
you
this
want.
one.
I can do another
No,
layout, or
no,
I can
I
do.
don't know if you're able to. I don't know how that
Oh,
stuff
I can do
works.
that
Like in Trading View, you have, but you're on the browser.
here. So chart. Oh, I guess I can't add another chart.
Yeah, it would have to be a whole nother browser tab, I think. I think with the Trading View layout, you have to open a whole like it's like the browser tab actually. Yeah, and then this does that.
Yeah.
So no worries about it. I was just gonna look at the gap, right? And I know that
Mm-hmm.
the top of the gap is 700, so it's like all the way down here.
Yep.
It's 25 700. All right, so there are two things. I mean, three things for this week. One, you have a 572 to 700, so you've got a more than 100 point gap on the daily chart, right? On the daily chart, just to look at the daily chart, I mean, there was just imagining it, there was a green candle,
Mm-hmm.
and then another green candle, and then a gap about 150 points into one, two, three, into a delete that one. And there's another gap into a green candle. So first of all, market psychology, when there's a gap over 100 points, that's bullish. No doubt about it. All right. And often it will like it will tag the gap, not get very far into it. Not do not once it starts digging into it, the edge is gone unless it fills it. But it shouldn't start, in my opinion, but it shouldn't start digging into it, but it is bullish. All right, so this becomes heavy support. If it's less than 100 points, I don't know if I haven't seen the stats on that, so I'm only talking about above 100. All right, and then you have, I think, which day was this? So that was, and then this was Monday, the gap up, and then on Tuesday you have a little candle. And now this is where we are on Wednesday. We don't know what's happening yet. So
I
this
think
is the
Wednesday
daily
was
chart.
FOMC, right? So
Yeah, yeah. And Tuesday, actually, that it was this candle, and then there's like a smaller one. Yeah, so it's more like that. Right. And then Wednesday ended up being a doji, which actually, if you look in the chat, look within, Patrick and I were both saying that we thought it was going to be chop that day. Um, and that is a piece of market psychology I do know, and that's what would have kept you from all of this
yep.
because ultimately, the morning of FOMC is trappy. It is, I don't like the word scammy because I think it takes away from most people, it takes away their sense of personal accountability. But words only matter in how you use them, right?
Right.
So if it, when I say scam about the market, I just mean it's trying to trap traders. It's trying, not even it's trying to trap traders. It's the market is made up of traders. So it's more like traders are uncertain, so they are allowing themselves to get trapped. Um, so you got the gap. That's bullish, tough psychology. You got gap up into all-time highs. So this was actually an all-time high right here. And then we gapped up into further all-time highs. That's tough. All-time high environment markets are tough. And then on Wednesday, we had the FOMC, the big bad FOMC. Yeah, we were just talking about you, my good Sir Patrick, and I was just saying that we called on Wednesday, literally just 5 minutes ago. We just summoned, we just druid summoned you 5 minutes ago. I was just saying that we called that Wednesday was going to be chop. Um, and it's like, I don't know exactly why you called that. But why did I call that? I know because I know that a giant gap up is bullish. I know that all-time highs are bullish, and this was all-time high. Um, I know that all-time highs are bullish, and I know that with both of those bullish things, the market would not be afraid to keep going up. And also, it would make sense to go down for a gap tag. And so, in my mind, because both of those things seemed perfectly reasonable, even if noobs were saying it's unreasonable to not get a pullback, I don't care because the market can do whatever it wants. So in my view, both of those things were completely reasonable for the market to do because hella people were shorting here, so why not squeeze them? And also we're very high, so why not get a pullback and mess with the people that are FOMO buying? So that's why I thought from a psychology, market psychology perspective, why I thought we were going to go up. And I don't know if it's a good opportunity for you, Patrick, but you can definitely I'll read yours. It's not a good spot for you to talk. I'll read yours. It had just been grinding up so long, it had to consolidate a bit as well and grab liquidity. Yeah, true. Facts. Right. Right. So it's like we had been grinding up for so long that it's like even if we don't get even if we didn't get a proper pullback, it had to do something to grab some liquidity. And why not an FOMC? I mean, yeah, that's fair. And that's kind of how I'm thinking that we're grinding it for so long, all those factors. But um yeah, so there's that. And I think the biggest thing is and why I said I almost don't even want to look at these trades is because it's like it was FOMC, so forget the morning, it's gonna mess you up. Because I think back to this trade, I think this was a decent buy. It's a very deep dip buy, right? So if you look at this leg, um, and this, all right, the GP is right around here, right? So you waited, and then that's the 23. This is the GP. Yeah, 78, right? So you waited for it to come down to the 23. You saw a doji, and the doji got above the red. You saw some buying pressure, and you went for the long. And then ultimately, one thing that you should note as you tighten up your stop loss um, is that for me, according to my data, right, the trades, if I get into a trade and it's a winner, it usually went in my favor immediately.
Hmm.
So that's why I reduced my stop because I was like, I tried with a 5 point stop for a while and it was decent, but it was too chaotic. Um, because if you're right in the moment, you're probably gonna be right immediately, unless you're working off like the 15-minute chart or something, and then you can give it more room.
Mhm.
But if you're already working on the 5 minute chart, like so, as soon as this closes one big red candle, I mean, this gets a little tough when you're using the solid 10 point, I mean, 20-point stop. So
Mhm.
it's something you can get better at because you need a hard stop in the market, and you just got to decide where that is, if that's structurally. Um, is even this, it's like if you put it in the structure, it came down, it just barely tapped the structure. But if you put it a little under the structure, you usually get an opportunity for at least get out break even. You just have to, have the emotional fortitude to actually pull the trigger on getting out break even and not praying that it can alleviate you from that into a loss. Because like this right here, I'd say you had, I mean, it started to go against you more, and it even came back down to your break even. And that should have been an out. That should have been an out for sure.
Yeah.
So that's a psychology thing. If the market's really just screwing around, if it goes against you and it's screwing around, get out a little less than break even usually. Because it's like it's kind of in your head. Do you want to sit through more minutes of uncertainty or just be done when it comes close? I would say get out a little, even though a lot of the times it may come back down all the way to your break even. But ultimately, the idea that I think is better, the best way for beginners to trade is you want to make more than you lose, right? So it's like if this goes against you and then it comes back down and you can cut it for a small loss, like a 5 point loss, an 8 point loss, that's
Yeah.
fine.
You'll see
It's
I did that. You'll
fine.
see I did that in the third trade.
Awesome.
You'll
That's
see I
actually
got tired of the BS. I was like, I'm not. So th this third trade here, I entered at 92, which was pretty high. I went long on 92, thinking that we were because we broke above here. So now I'm like, all right, like I failed this one. We came down and now it flopped around here, grabbed liquidity down here, huge ass wick, and I'm thinking we're gonna go back up. And I grabbed at 92, so I was ready to go around in there. And then like it just was like, no, I'm good, and it just dumped. So I think we got to 84, and I closed it out. Yeah. So we got to the bottom, and I mean, I could have let it go, but just chopped. We just chopped this
right.
day. It was just chop, chop, chop.
Yeah, I'd say that right there is awesome. I think actually I'm gonna keep this just to remind myself of what the daily looked like and remind everybody.
Oh. Is it still on the screen when
Uh
we move over, or did it
yeah.
get wiped off?
No, I cleared it.
Okay, 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 okay.
I cleared it and then realized I didn't want to. Yeah, so you got in long. I think so you tried the long and then it puts in this juicy bull hammer. And then do that's the 90. Yeah, a little hesitation on the bull hammer. I'd say if you're gonna take bull hammers as an immediate signal, it needs to be immediate.
Okay.
And I don't know if that, I'm not saying that's why you took this trade, that you took it specifically because it was a bull hammer, but I'd say this 84, because what did this come up to? Would this have hit?
95. We went
Would
to
this,
90, 95, and then I don't know if we
yeah,
went up initially and dumped or what, but I mean, it came up to 300. So yeah, if I would have gotten in almost immediately, I would have hit my 20 points.
yeah,
No, 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 no. No, I would not have.
yeah, I think it would have shied your 20 points
It would have
by a little
Yep.
bit, but that's fine because at about 75% or so, it's not a hard science. So at about 15 or 16 points is when you want to go break even. You
Yep.
don't want to let something go from an almost win to a full loss ever,
Yep.
ever. So ultimately, it would have given you enough to go break even if you're going to get those. If you're going to go for those hammers like these, these are
Yeah.
these are green bear hammers. Shooting star. Technically, we're talking about hammers and shooting stars, but I just call them bear hammers and bull hammers. I don't really care.
Gravestone.
So
This is a
yeah,
gravestone.
right. Yeah, the grave.
Yeah.
Oh, right, gravestone. I think gravestone is what hammer at the top.
Sort of. Yeah. I think it's less of a hammer, more of a doji than anything. Well,
Okay.
it's all relative.
Yeah.
It's all relative. We're on the 1 minute too. We're on the 1 minute chart here, so
Right.
they could just
Trading the
mean
1 minute.
whatever the hell you want.
Right.
But
Um.
yeah.
Yeah. So ultimately FOMC, and then also if you fibbed out this whole leg, this is a GP. This is somewhere around. Yeah, there is like the GP. That might be a little wide for a GP, so I think I've
Hmm.
got it right here. And it's like I mean, you could have taken scalp after scalp after scalp if, but with a tighter thing. So ultimately try to get so the goal is to try to get entries better. But I would say yeah, lesson I mean, this day it was FOMC morning. So shouldn't have even been trading. So remember that
Yeah.
next time FOMC comes around. Because beginners simply shouldn't. And if they are, they're forcing it. And if they're forcing it, they're not in control of their urges.
Mm,
Like or so there's something like did like at the and I don't mean, I don't want to dive too much into right, like this isn't a Marines boot camp. But it's like if you thought about FOM, the fact that Wednesday was FOMC, and if you thought that you shouldn't trade in the morning, the question I think you should ask yourself is why did you anyway? So,
right.
there's that. But then ultimately, this one. Wait, why didn't this one
So
have?
why did that one not? I don't know. I don't know if I got psychological cut here or what happened here. Because this was
Why?
a not a bad trade. I mean, I entered very low, but not a bad trade. But for some reason, we cut early here. I'm not sure if.
I think that's fine because I don't like. I actually don't like. I don't like the trade. Unfortunately, actually, I mean, if you were using if you were using that two bar system that I described,
Yeah,
sure, you could have a tight stop there, a tight entry and a tight stop. If you're using the 1050 cross, is this the 50? No. Yeah,
10 is
bruh.
purple, 50 is red.
10 is purple.
So we had the cross right here.
Okay, yeah, all right. So if you're using 1050 and you see the 1050 cross, okay. And if you're using fibs, could you fib this leg out? I want to see. And actually just the 100 only from here to here. Let's do from here to here. Because I'm thinking higher low,
From
higher
where?
high, higher low, equal high. From here, this to this. Yeah, all right. So that green candle came up and closed. But that's a little tough because sometimes it comes up here, but um lower low. I mean, really this is like the prevailing structural high. Right. And then this is like, but remember, once it does stuff like this, throw the structure out the window and just look at like the
Yeah.
tops and then wait for a defined leg. All right. So you got this is like the trend line, and then you get this that breaks the trend line. It's like really, if you were super quick on it, right, you could fib out like this to this, and this would have popped back. But ultimately, it's like this is clearly a break of this consolidation. So that's another time I would say to use the tools.
Yep.
And the tough part is like, I don't know, if something like this happens, I think the best thing to do is miss the trade because it closed a full body green candle. And when you get good enough, when you get some experience, you can definitely short a full body green candle if it's at the right spot when you get some experience, but I don't like it. So I don't know. I just think that there was no reason that uh this candle could not have been this and stopped you out. That's my problem.
Yeah.
Is and yes, the 10 and the 50 actually did cross, but it's like I mean so right? They actually did cross. Like, I don't think the algorithms are exactly using the exact 10 and 50 exact cross. I don't know. Um, like this, I guess, didn't cross, and that's nice for the 1050.
Let's see what it looks like
Um,
on. I'm curious as to what it looks like down here. So we
yeah.
crossed here too,
Okay. Yeah, there we
and I
go. So you
mean
got that MACD,
we
you got that
crossed here.
drop. under the average. That's true. You got that dip under the 50, but you also got a dip under the 50 here, and it still is FOMC morning. Um, you know, and then eventually you get above the average here, and it starts showing having little shows of support. Um, but yeah, I think ultimately, what do your trades to me look like? You're waiting too long. So for like thinking about last week, this week, the week before,
Yep.
I kind of want to almost go watch back over all of the videos and see, because I remember I feel like week two or something, the entries, sure, they're not all perfect, but I feel like they were quicker or something. I don't know. Yeah, I feel like perhaps you're waiting too long because this one, I mean, it's like I could call this a waiting too long, but I would say it should have been a missed trade, especially because it's FOMC morning.
Right.
But let's see what Thursday looks like because I think the prevailing lesson of this Wednesday is don't trade FOMC. Like this is
Right.
a nice entry. That's what I'm talking about.
Yep.
This is nice. That's nice, right? So because we definitely have the lower lows, and then this is like ugly. I don't even know what I would fib out here, but you at least get the retrace back to the 100 EMA, the 50. So you at least get those nice retraces, and I can't really sure I could say this doji on the close of this doji, right? So I could say the entry should be here instead of here. Sure, like
My entry
I
was 60
I guess.
64. So 64 I was what,
Oh,
right?
word. So you actually went in as soon as this one started
I
following
was
through.
like right here. It was like the top of this candle. Here, I'll
Yeah.
just make this a little bit bigger. So 64 was basically like right here.
Yeah. Yeah, so I think this is an awesome trade. I mean, you got the 50, you got sloped down, the 100, you got sloped down. I mean, this is a structure break high.
And I went
Uh,
early on this because if you look at the cross, right, the cross didn't even happen yet.
right. But it's FOMC and you got to expect the
Yeah.
screwery. You got to
Yeah.
expect the screwery because if you zoom, I don't do it yet. But when we were looking at that 8 o'clock, it literally, I was scoping it out. It was fresh high, lower low, fresh high, lower low. And then on open, it went like this, and then so it's like on the FOMC day, expect the screwery. So that's why I think in context of FOMC, this is a great trade. But the reason I think a newer trader shouldn't even take it is because now I'm telling you in context of FOMC, this was a good trade, but really it would be a pretty questionable trade in on a normal day. But still, what would have made it a good trade on a normal day is this whole set of dojis.
Yeah. And
I think
I'm
that
trying to look for them more because I'm trying to get to the point where I'm like, I'm seeing the candles get smaller, slow down, dojis,
yep,
right? Wicks up, right? Like
uh-huh.
wicks being up instead of down. Like some
Hmm.
interesting things like that. Yeah.
Yeah, yeah, 100%. Look for at least what you said at the beginning, the smaller candles, slower speed. Where the wicks are, definitely, if most of the wicks are pointing up, but that can just be a little tough to see in the moment.
Yep.
Um, but if you can see that, that's even better because that for sure is good if most of the wicks are to the upside. And this is how this is one, like I said earlier, everybody says don't catch a knife, right? But it's only a knife until you get your proper signal, right? So this is how you catch a top. Um, you want to wait for multiple dojis because then it's a rolling top. And then once it starts rolling, you can literally just trail the freaking top of these red candles and it'll just keep rolling. Or sometimes, because you should always, here's a market psychology thing from Semper, is always look for how the market could be trying to screw you because the market screws most people and most of us are the same, right? So if a noob comes into the market and just tries to think about what they're doing, tries to do whatever they think they should do, they're probably going to lose a bunch of trades.
Yep.
Or they're gonna the problem actually with a lot of traders is that they take bigger losses than they take wins. Um, but always be thinking about how the market's trying to screw you, especially on screwy days. Thinking about how the market is trying to screw people is how I predicted is a large, like I was explaining, all those bullish factors, except now people know that that's bullish. So that's why how I determined that Wednesday was going to be a doji is because thinking about how the market's trying to screw people. It's like thinking about the gap up into all-time high is another example of thinking about how the market's trying to screw people because people see the gap up all-time high, they think, oh, it's too late to go long, but we're so high up, I can short. It's like the market's going to screw them because that's the direction it's already going in.
Yeah.
The two bar stop thing, I like to enter right at the two bar stop, like that sort of thing. So I think this is a really good trade in context and to think about how the market's actually going to try to screw you. Um, so yeah, I mean, I'm going to look at the 5 minute actually real quick on that. That was 11. It's 11:18.
I don't know why I didn't let this one run. I think I may have been trying to trail a stop here on this one a little bit. Um,
Yeah.
I definitely set my initial take profit off because I was at 47 and it should have been at 44. But
hmm
yeah, this day was a weird day for sure. Like this trade probably would have been
Yeah.
what 44, Jesus. I mean, yeah.
This is
If I would have let this
yeah.
one run, I would have gained another Jesus Christ, 40 something points.
Yeah, I mean, what is this? So your 64 is right about there, and then it ran all the way to what is this, 30?
Down
Okay, so there's
even farther.
30.
Yeah.
Yeah, yeah, it's on the right. It's on the initial that's 30 and then it went all the way to 40. This is why I say 40 is a good take profit and I'm starting to wonder like is 20 just like a cursed number in the market and not literally a cursed number, but just
Yeah.
like something about the average true range and such. Just because you entered there just above and then oh yeah, and then you closed two of them early-ish. Where would the 20 have been? I think these 20 would have been right
47.
there. But yeah, it's almost like 2020 I feel is the breaking point, and that if the trade goes 20, it should if the trade goes past 20 and it was a good entry, it could continue, but I don't know. That stuff is a lot of feelings, so I'm gonna try and not get into that.
Okay.
Everything I've said so far, I think is pretty factual, so I'm gonna try and not get into those feelings when I don't have data. But yeah, ultimately you could have ran it. Your entry was here. A stop at break even, you would have gotten the 40. Um, Another thing to reference that price action thing earlier, if you want to use it, is this two bar did not get violated. Right. So then it didn't get violated to then go down, and then ultimately you get that two bar, and then the stop stays here, and it's still did that get hit? Um, Yeah, I think it like just barely got hit, but I put mine like 2 points above the two bar. So it's like literally you see that two bar never got hit until like here it definitely did.
Yeah.
So that's something to think about too. If you don't like the fibs and you really want to find a price action tool, pick on your time frame of choice the two bar. And don't do two dojis though. If it starts dojing, pick the last at least decent candle.
Okay.
So that's something to think about if you want to add that simple price action tool that I use. Yeah, good trade. Should have let it run. I think you were probably, and this is why you shouldn't even be trading on FOMC morning because you probably didn't let it run because you were salty about the earlier
I
trades,
got
which were,
psyched. This day was a psych day.
yeah.
I mean, hypothetically speaking, one, two, three. I theoretically these are my three reds,
Right.
and
Oh,
that's
so you
where
should have
I
also just
should
stopped.
stop there. And then I had a green,
Uh-huh.
and then I had a green, and then I had a red.
Yep.
So yeah, there is some rule. I told you there was some rule breaking happening this week
Um,
too. You'll see it. This is probably the least, but
yeah. And it's like this trade shouldn't have stopped you out so badly. I mean,
oh, did you see this
no,
trade? This is one of the ones. This is one of the. I mean, yes, like whatever, but this is
this
one of the
trade,
ones.
yeah,
So
forget the 1 minute. I mean,
where do you think 66 is on this trade?
yeah,
The
that's a
green
tough
line
one.
should give it. Yeah,
That's a
yeah,
tough one.
yeah.
That's a tough one.
This is what I'm saying. I got effed.
Well, the problem is this was clearly a long break structure leg. So
Yeah.
I don't even, so it's like this didn't, I don't think this should have been a short, although that's pretty messed up. But it's like ultimately,
I think my idea here was that we were coming back up for the right,
yeah,
and
for
we're
the
gonna
proper
continue
lower high.
come down. We're gonna retrace down.
Yeah.
And I need 20 points, so I would have had to been down somewhere around here.
Yeah. I mean, the 10 and the 50 crossed up and then price held it and it just gets more significant. Um, and it's like you wanted a break all the way back down below the 10, it looks like. 60, 80, 84, 80. I'm sorry, 68 is here. That means like 48. Yeah, so I don't know. It's like even if this didn't stop you out, would you have gotten out at break even? Would you have?
Yeah, what I have in the minute. Yeah, I don't know. That's a good
Right.
question.
Um, so I think that's something to think about because it just barely came back down to your break even.
Yeah.
So would you have? I don't know, but that's another piece of psychology, right? Is again, I mean, this one kind of went for you really quick. Um, you know, and the two red bar would have at least got you out for a smaller loss.
Yep.
So yeah, I think the lesson of this whole day is yeah, don't be trading the day of FOMC unless you're looking for the screwery.
That's
Um,
it. That was Wednesday.
yeah, unfortunate Wednesday. That's pretty tough.
That was a I don't know. That's the least of the worries.
Least of the
Um,
worries. You tell
at
me
least
Thursday and Friday were even worse.
uh probably.
It's hilarious. Not really.
It was a week. I told you it was a week. It was a learning week.
Oh yeah, I just now for the first time just peeped your balance.
Yeah.
Do you have
What?
trailing? Do you have end of day trailing or do you have unrealized trailing?
I believe it's end of day.
End of day? Okay. All right.
Off the top of
Cool.
my head, I believe it's end of day. I go
Oh
look.
yeah, because you did lost 12 or something like
Tradeify.
that.
I can tell you right now because I just looked it up.
Okay.
We are on a growth 50K. It is drawdown mode is end of day.
Look at this guy's face.
Trailing max drawdown is 2K. So yeah, this is boop.
Cheesing. Yep, trailing max two, yeah, end of day, yeah, trailing two. All right, that makes sense. Okay, cool. So that means you at some point had, right, that was the 300 that you had. So you got down that and then down another 350. That's not even that bad.
Mm,
Not bad at all. Not bad. I
okay.
would I would almost say with your consistency of not blowing the account, you may want to consider trying to pass this quick or scrapping it and then getting a one of those straight to funded accounts so you never have to pay for it again. Because I just those accounts basically these accounts, the growth if you the lightning ones are, I think, 4 times the cost of the growth. So
Yep.
if you pay the growth 4 times, you may as well have just gotten a lightning or whatever.
I think I've only had this account for a
This
month. I think
chick is
I've
hot. Since we're an hour and a half into the recording, I think I'm safe to say stuff like that.
That's fine. We're all in
Um,
agreement.
Yeah.
Um,
So,
so Lightning funded is 244.
right, you have
I'm not trading
244.
I'm not trading more than this, so it doesn't matter. I don't know
Oh,
how bad this would be.
yeah, that would have gotten hit. The
But I
Lightning.
have to keep my consistency at 20%, which may save me because then I'm like,
Hmm.
well,
Hmm.
yeah, yeah.
Yeah, because
It's yeah,
you'd have to get this one to equate the account you have. You'd have to get this one because this one actually gives you your 2000 and your 1250.
yeah.
So this one's 356. How much is that growth? What was that again? That was like three. Yeah, so four. So it's four of them. So it's four. Just like so, yeah. It's a little less than four. So all I'm saying is, if have you paid your second renewal yet?
I think I just did.
You think you
I
just did?
think I just did. Yeah.
Okay.
It's either I just did or I'm about to. It's either or.
Check that. Check that. If you haven't, maybe consider getting a Lightning funded if you can spare
Yeah.
that type of money for. I would get this one if you can do the four on. If you, because it seems like you're not blowing the accounts, you're not doing anything that would risk blowing them. So
No.
I just wonder if it's going to take you some more months to pass. Maybe do this if you've already paid it, then let's get that thing passed in a month. We will we'll feed you a couple trades, no problem. You know, just give me the login, bro.
Welcome to the Hey
Not
everybody,
really.
welcome to Toad Sage's call outs. Um
Yeah, for
no,
now.
that's fine. That's I listen, I've been grinding. I blew up I don't know how many funded next accounts because funded next does like a 1500 profit target. Like
Yeah,
yeah, they have a real cheap one. I've probably blown those up like 10 or 15 times. So you're
right.
talking like like over $1,000. So at one point I was like, man, should I just go to a funded account? Like, would I like my mindset would change because I'm trying to pass $1,500 in 2 days, like or a day or 2 days, trading 10 contracts when I can probably potentially, I don't want to knock on wood, trade consistently at like $200 a day, trading a few contracts. So
Yeah.
I get frustrated because I'm like, shit, I'm sitting here grinding away at a challenge that's $3,000 and I'm trying, and like it's all part of it. Like anybody who's watching this, you
Uh-huh.
should absolutely start small and then scale up as you get better. But I just,
Hmm.
it's infuriating that I actually finally had some consistency for a few weeks and it's like, well, you're getting there, bud.
Right. I mean, you
I
trade,
said this
yeah,
to you. I said this to you, but I was just like, but I
yeah.
also don't want to screw up my consistency, which, yeah. Yeah, that's where
FOMC
I got
and
effed.
all-time high.
Yeah,
And
yeah. I
FOMC and all-time
sized
high.
up on the
Do
worst
not.
week of the year.
Yes, and I wish I realized that, but I was
That
planning
was
on
my
taking a
fault
break.
too, though. That was
Yeah,
my fault.
everybody's
We
got to
didn't.
take their own
Yeah,
responsibility, but
I
still,
think. Yeah,
and then Patrick says a good point. How much do you want to make per day? He said if I remember right, 200, 300 is 500,
yep.
something around there. Just a few
Yeah,
hundred is the daily goal,
a
the
few
financial
hundred,
goal.
Patrick. At like I honestly like I'm not looking to make $1 billion a day because I'm not there yet, right? As a trader, like I'm not that good. So if I'm able to do two or 300 a day, like that would be for me, that would be I would be ecstatic because then I know I'll at least be generating something. Like I'd be able to see like my progress outside of just consistency. But um yeah, that's two or 300. And I think that matches my contract size too, right? Like if I'm hitting the trades, even if I'm not letting them run like crazy, I can, two or 300. My initial profit target was 50 and I was hitting it pretty consistently the first week. And then the second week I started to let things run a little bit more. My stop loss, I had to reset my stop loss. I was 20 points, no questions asked. I haven't moved it since that first week. So it's really just been, I think my average was like 250 a day or something I was doing before this week.
Yeah,
So I don't know what this, I think I have to do what, like 5 days on this or something, something like that. I don't even know. This doesn't even tell you. But anyway,
right.
20% is tough. I agree, Patrick. It's very tight.
Yeah. I mean, it's yeah, it's tight.
What is that
It's,
like?
I
If
mean,
you $300, 20% of $300 is $90. I'm sorry,
oh,
uh, $60,
that's
$40.
not how it works. How it works is they want your biggest day to only be 20% of your maximum profit. So if you have $10,000 of profit, they want your biggest day to be 2,000.
Right. So okay, all right. So if I had my
So
first, so if my first day was $200, they're gonna use that as the profit target, right? So then that, or
no, the profit target with these is already set. They don't say it here for whatever
okay, I was gonna
stupid
say
reason.
that's why my brain
Uh,
was
they don't they really should say it here, but they just don't. Matter of fact, like they only say that, so the profit I don't even know where it is for real. I mean, it probably is in payouts. It's probably in payouts. Probably a lightning payout, and then if you scroll down, it'll tell you how much you need to make. Yeah, the account size. So you would want the 50, or you can really scale down and do the 25, but those, I mean, those are just so small. You would want the 50 and your profit goal is 3,000, right? So 3,000 divided perfectly by 5 is 600. So you would want to make a maximum of 600 a
600,
day.
which is fine.
Yeah, so that consistency rule is really only a problem for like big traders that take like one or two trades a week or something. But it's still tight. It's still tight. It's still
I mean, it
hinder.
goes up. If I do actually get a payout, it would go up too.
If you do actually get a payout, um, lightning from yes, yeah, I would go, and it resets. So then your goal for payout two is smaller. Oh no, this is after. And then your goal for payout two is smaller. So then you'd only have to make 2,000 divided by five, which is 400. So, um, so yeah, I think that if you haven't paid it already,
Okay.
if you have paid it, then we'll just give you some call outs until you pass it. No problem. We're passing that this month. And 30 points with four micros is 240. Yeah, for real. 30 points, four micros is 240 for real. Micros can do some crazy damage. The other day, I was watching my buddy backtest, buddy Pete. I mean, my probably next to Semper Semper and Pete are my biggest mentors. May the God smile upon them both. And I was watching Pete backtest, and with 10 micros, he made $1,000 in his backtesting in like a 3 hour window. It was like from like nine. No, he doesn't trade before the open. He doesn't trade before the open, and so Pete doesn't trade before the open. A millionaire trader does not trade. Well, I don't know how much money he's got, but doesn't trade before the open. So and nobody even knows who Pete is. So yeah, I think that you can do the micros can do the freaking damages.
Oh, I know. I trade
Um,
when I was trading the fund and X accounts, I was doing 10 micros.
right.
Yeah. Yeah.
So,
Yep.
all right. So then, what's this right here? This is
So this
Thursday.
is Thursday, which is the 30th, right? So Thursday was a screw you fest again. Um, there was
Right.
definitely some revenge trading on Thursday. I'm gonna pre-warn everybody. So first trade of the day, I actually was good. It was green. I started out with three
Um,
right here.
why'd you go long here though? I'm gonna start being hypercritical. I'm gonna start being critical all the time, actually, because I want you to get better. So I'm just gonna start being
So
critical.
let's see.
I think this. All right. So you got the lower low, lower high, lower high, lower high, lower high, low, because the structure doesn't break till here. It's arguably here. Yeah, you could say here.
So that's
Eh,
probably why.
Okay, that's fair.
That's probably why. And I
That's
probably was
fair.
like, I don't wanna
No,
miss.
that's
Um,
fair. That's fair. You
but
know what?
I
That's
also
fair.
think that I may have been looking at
60.
five. I have to remember when I'm looking at the five too, and my journaling is still pretty shit.
Mm-hmm.
Outside of the automated journaling, my journaling is still pretty shit. So I have to. That's
Mm-hmm. Then you get to
maybe it's
MACD cross.
a goal this week. So MACD cross
MACD right there.
was
All
early
right,
too.
you get it above. Okay, so you know what? This is not
This is
a
where
bad long. This is not a bad long. I said this is not a bad. You get multiple kind of divergences. I think the fact that the RSI crossed above the average and it's still going down, that's some
Yep.
divergence.
I've been looking for 10 MA crowing too. I know
Yep,
Semper looks at it on the five, and I try to look at it on the five too, because like I said, the
100%.
one is a lot of noise. So that's yeah, that's
10
where we
MA
entered. So
curling,
one
consolidated above. Okay.
110.50. So we were at the top on this one, literally.
Yeah, yeah. I mean, little, perhaps a little early, whatever. I mean, a little late still, perhaps a little late still, just because at the top. But whatever, I don't think it's really because what else are you supposed to do? Enter
Yeah.
here? I would have really been complaining there. So it's like, you got multiple, right? And then boom, you get that. Okay.
So took the two at the 20, and then we set the stop loss to be just above break even here for the 2.5 points extra.
Cool, awesome.
So, and I've been doing obviously what three contracts, taking two, like you said, take two instead of one. And then
Yeah, because your win rate. I think
yeah,
as soon as we get out of this weird environment, you'll be
yeah.
fine because you had a
So
70% win rate. I think perhaps I was gassing you up for the hardest week, but
it's fine.
not bad. And if this worked,
I'm
this could have gone all the way up here. So
I'm
I think this
happy that I had a shit week during the hardest week of the year because honestly, like I feel like it's almost inevitable to not have a shit week, you know? So
yeah.
I don't know. I just feel like I was waiting for like psychologically, I think I was waiting for it because I'm like, all right, like I'm actually doing good. Like I'm actually like succeeding, being consistent here for a few weeks. And I think I just was like, oh man, like I gotta like crash and burn at some point. Like I've crashed and burned previously, but like I gotta have not a great. I don't know. And that's the imposter syndrome too, probably kicking in a little bit. Like
Yep.
but yeah. So this is where everything goes haywire, right?
I mean, you had a tough week on probably actually, yeah, one of the hardest weeks of the year. And you didn't blow the account. So
Yeah, dude, my number one thing that you guys have ingrained in me is the 20-point stop. Having a stop
yep.
in general,
I mean, stop. Yeah.
I've seen the stop in general, like obviously screw you, but the 20-point stop has been my like best friend. Like the first
Yep.
thing that I do, and you'll see I have my bracket here, standard 20. As soon as I hit one of these buttons, boom, it's 20 points up, 20 points down, and then I'll edit the 20-point take profit or whatever.
Right.
But the stop never changes. Like it
Right.
literally never changes.
And I gave I gave the 20-point stop out as a good thing to get started that you won't screw yourself.
Yep.
Um and then you can tweak it accordingly. Like um and figure out how you like it because I said the 20 point is a good standard to keep yourself safe and all that and it's working, right? You actually if not for this week, you'd be green. If this were a regular week, I bet it would be green. But like I told you, I use like a 11 or a 12 or a 10 or something like that. So it's like totally negotiable. And some people can use up to like a 30. Like they see this and then they see this, right?
Yep.
And then they're like, oh, opposing hammers and then a breakout, right? I'm gonna go long here. And then they say, and then this is a V. And getting in on the front side of the V is the problem that most traders have. They're like, "Oh, this is too much red. It has to bounce." No, it doesn't. All right, it doesn't have to do anything that anybody thinks or wants unless they have enough money to make the market do it. So, but this right here, they're like, "All right, now I'm on the right side of the V. I'm on the back end of the V. I'm just going to get in here, and my stop is going to be the bottom of the V." All right, and that is a probably what that's like just under 600. That's like a 50-point stop. So
Yeah.
it's like some people, the 20 is to keep you safe so you can figure out how you want to trade. Because
Yep.
ultimately, let's say, yeah, right side of the V, whatever, and I get in here, you know what? My 10-point stop would not. This is a trade that goes for you. This is what I mean by good traders go for you immediately. This candle is what I mean by good traders go with me immediately. They go with me immediately enough to make a little bit of profit, and then they come back break even, whatever. And then this hammer is a case of this hammer is a case of actually, it looks like it did it break the 10? What are these? These are 20-point increments. So this is a 20-point increment. Yeah, probably 10 points. So this one probably would have stopped me out, and then maybe I would have entered again, and then that's fine. So how big your stop is a function of kind of how many trades you're willing to take and stuff like that.
Yep.
So definitely it's kept you safe, it's kept the account alive. But edit it as you see fit. Just stick to something because we discovered some great data that you win 70% of your trades when it's not FOMC all-time high.
Yeah.
So
Yeah.
you know,
Yeah, it was, and this is like one of those trades where that stop, this is, so I was playing four this day, right? I don't know why I started with three and then went to four. No idea. This trade I remember clearly because I was like, all right, we went down, we came up, and in my brain I should have been like, this is going to be the higher low. But then I started seeing some big red candles. I started seeing these hammers all around, and I'm thinking in my head, we crossed hard. The 10 crossed down real hard. And I'm thinking in my head that we're about to just dump off. And I believe, yeah, we had already crossed up here, which is obvious for a 1 minute chart anyway. We crossed over down here, came back up, retested. So I don't know what happened, but I basically entered four trying to short here and obviously got stopped out. And then saw it kept chopping and tried it again stupidly. And this could have been revenge trade. This could have been whatever you want to call it. It was a stupid trade, but that's actually what it actually was. And so we got double stops for two trades here, trying to.
um,
I don't really call it bottom
oh,
because
I see.
yeah,
You tried to. I can't. It's hard to tell because these. So you were trying to go long. Is that
no,
you're trying to go
no.
short?
I think I was going short.
Yeah, I can't. Oh, okay. Yeah, okay. I see the 30 and the 13. Yeah, okay. Yeah, you were trying. Yeah, you were short in the bottom hardcore, and that's why that one trade. I think it was yesterday. I think it was Wednesday. You were. It was like this, and then you shorted here, and then it did this, and you were like, this was finally a good trade. But this is that trade when it doesn't work out. It looks like
Right,
a bad. It looks like a bad trade.
exactly. It's a
Yeah.
shit. Oh, it was a shit trade. It
Yeah,
was.
that's
This killed me, and it killed me more because I was like, "Wow, I sized up, and look, it's fucking." It's like everybody says, when you size up, you start screwing yourself.
yeah. Yeah,
So yeah, this was just a bad. We don't even have to review this. I know it was bad. I know why it was bad. I just
that's all right. This whole chief lesson is of this whole week, and this is on the of this episode of this now almost 2 hour long episode 4.5 is psychology, and I think that you should throw practice. You said this week was a psychological hit. It's like practice if you can. Throw this whole week out the window and actually try to not think about it and let it affect your ability of what you thought because I saw the data from the previous weeks and it looked good. And matter of fact, uh, you sent me your data and I have it right here and I'm clicking on it. You still have actually this whole week was a 52% win rate. Um, so still half of your trades were going to your first target. Um, so this week wasn't even that bad. It was just that too many trades didn't follow through. Um, And if you had cut out the bad trades, that would have been fine. So I think you should just throw this whole week out the window. Is
yeah,
that's
it's just
and the psychology lesson is the market psychology is like this. If you don't have the experience to spot and be ready for the screwery, you can't trade when the market's trying to screw people. Like an
yeah.
FOMC all time high week.
It's funny too because the whole I'm just looking at this now. The whole thing about threes and don't take the third leg and just looking at it, but like
Yeah, true.
one, oh, that was a little too long. One,
Yeah, you call this three nice
two,
legs.
yeah, yeah, yep, three. Like I just had to do this here or here or
Yes.
here. And then look,
Yes.
we reverse. And then it just kind of gets shitty, but regardless. So we can keep going, but
I think
so
you
this
can
was,
actually fib this
sorry,
out.
sorry, sorry, sorry.
No worries. I think you can actually
Um,
fib this out.
so it
And
was,
this is
yeah, it was this trade, this sort of winning trade. I mean, it was a winning trade into these two big losing trades.
uh-huh.
And then we moved on throughout this day, and I was trying to find my rhythm here. So
This is okay.
we got a great one here.
Look at this. And
That was a
when you
great one.
draw your price action tools and you use
Yeah.
your price action tools, it gives you great trades. Just as simple as that. So this is
I
awesome.
yeah, I took 20. I almost wanted to do a straight four here. I'm not gonna lie. Like I was almost in my head being like I need to take four here to recover from what I just did. But I didn't because I didn't want to be like that. I don't want it to come out to be look like a revenge trade or I'm trying to I didn't want that. I fouled the 20 points and then
Right. So
I let it play out a little bit and I was like, all right, like this is not we're not going anywhere. So
right. And but so the thing that the lesson I was trying to ingrain, what I was trying to say preview when I started talking about the 20 points 10 minutes ago was that that's an ATM, but and this is how my buddy says it to me, and it's almost pissing me off because it sounds condescending, but that's an ATM, but you're not, but you're a human. And it's like, duh. All right. But it's true. So it's like you are human. When you get a giant red candle in your favor, um, think about the structure, think about how tricky things are being,
mhm.
think about your because no matter what, unless you genuinely feel like you've just happy reset, right, and you are now no longer mad, unless you genuinely feel like that, you have to accept it, right? So it's
Yeah.
like I agree with you. I think there was no explicit reason why you had to. I mean, like I said, two bar, right? I would have been like, my stop's here. But then I think this was great decision making. I think that was great. I think taking the two at first, yes. I think you did the right thing of fighting off that revenge trading and letting the trade work out. And then when this came by, that's awesome too. I think because, like I said, when this goes on, like 10 candles of straight consolidation up and down barcoding, screw it. So I think getting out there for your full 20 points and not letting it come all the way back to break even was awesome.
Yep. Yep.
So that's
Um
great.
and then this one we tried calling a bottom again, or well,
Hmm.
continuation down.
Hmm.
Same thing, cross,
Hmm.
probably my indicator. And I gotta tell you, at some point this week, I said, I might have to relook at my strategy because I'm thinking in my head like my indicators and everything else aren't working. Like, I feel like I'm seeing break of structures, I'm seeing crosses, I'm seeing RSI go under 50,
You know,
and I'm like, oh, I'm like, it's not working. I'm thinking in my head, I'm like, it's not working, and it does. It's just I got really in my head at the end of the week because I'm seeing stuff happen. I'm trying to follow it
hmm
or let it confirm, and then it just like so like this one, another one. It's
yeah.
coming down and it goes up, and I'm thinking maybe we're gonna have it come like retrace up, which it
Uh-huh.
did. It did over here, um, and it was gonna continue down, and so I took a four contract loss here.
Yeah, what's this? No, this is a 3 point gain.
Oh no, wait, what?
Because you were short at 010
Oh
and
yeah,
it
yeah,
said
yeah,
you
yeah.
closed at 0.7, so you at
Yeah.
least
So I
recognize
must
that
have
it was.
recognized it because I did the same thing here. You see here?
Although if you're going to try to catch a rolling bottom, because this is a setup, right? And that's the hardest thing. That's why I was hesitant previously to say those trades weren't good, or to say those trades weren't whatever. I don't remember what I said, but um, that is a setup because I'm looking at that on the 5 minute right now. That was 2 p.m. And you already in this I'm looking at on the 5 minute in particular, and this is the rolling short setup is when it rolls, and then just until you find something better, mark out that two bar, right? And watch the most recent capitulation bar is a word I learned from Lance Breitstein. Basically means giving up when you capitulate. When the market capitulates, it's just like a do capitulation, right?
Yep.
So you look at the final candle of the capitulation, and then I'm looking at the one above it. All right, so whatever, look at those two candles, and basically, if price cannot get out of that zone, that's when you roll further, and that is the roll setup. So, but then that can trick you too. So I mean, if you look at this for here, it just barely broke that bar, and then it rolled. But it's like at the same time once a roll setup works, you shouldn't be sitting there trying to take roll after roll after roll. You know what I mean? Like that's
Yeah.
like you can have runners, but like that's like trying to take a pop after a pop. And it's like it's just not gonna work most of the time. Like it works
Yeah.
sometimes, but it's not gonna work most of the time. So, um,
Which is crazy because I think if I would have followed my rules here, it probably would have been okay. If
yeah.
I shorted 010 0.25, and I would have been at 30.
Oh
Yep.
yeah. So that's the thing though on these rolls on the roll flush, um, you want to try to get as close to one of the capitulation candles as possible. You don't, in my opinion, I could start looking at it more and tell you a more strong thoughts on it. But I don't think you want to be taking, like, I think this was the right idea, actually, to short the top of a green candle
Yep.
looking to stay under here. The problem is just that you went for like the third roll. This is like the third leg thing. This
Yeah.
was the first leg. This is the second roll. You're trying to get the third roll, but the third roll is like, I don't know, when the third roll comes, it's eventually like the fattest. I don't know. It's just that third leg. So I think this one like this right here, right, would have been like a kill, maybe a good roll short. I don't know. I can only see it in hindsight. I don't know what I would have been thinking if I was actually looking at it, but point is, if you're gonna look to take these like roll setups, I think shorting the top of the green candle is the right one. But this
Yeah.
was too early, actually. Unfortunately, like I hate to then say that, then say I would say maybe like it has to be at least like five, like a few candles in or something like that. Like so, like this maybe. And then maybe this could have rolled, but it just picked it up. But ultimately, it's hard to also say because this is like
Yeah.
trying to go for the third
If
leg.
I
So
would have just let the stop play out, which I guess this day really psychologically screwed me, right? Because I had some big losses.
yes, I think
I
you
had some
stopped.
wins, I had some big losses, but if I would have just let my stop play out,
Uh-huh.
we would have been what? Right here? At
Yep, it would
30
have been at
points.
this yellow line
So I
because
would have
you were at 10. Yep.
never taken this trade, and this would have just kept going. So I would have
Yeah.
taken my 20 points,
Although
and
really, probably what is this, 80? Oh no, is that 90? Is
that's
this?
983, and we're at 01 something. So like I would have taken 20
I'm
points.
confused. Oh, this would have been the 20. If it makes you feel better, you probably would have gotten hit break even. So it would have just been a one target winner,
True.
if that makes you
True.
feel any better about it.
Yep.
Um, so okay.
So that's it. I think that's it for this day. Yeah.
Yeah,
So yeah, those two big ones killed me for sure.
I
I had a
guess
couple good wins, but it's these two right here really.
yeah,
My losses were bigger than my wins this day, unfortunately. That was the moral of this day.
right. And when I'm taking some notes here, I think when you used your price action tools,
Yep.
when using price action tools, it worked out, right? Like it worked out better, right? You got more profit out of it. You got a better entry when you actually use those tools. Um, don't be chasing shorts or longs without really studying proper short roll setups. Like there is a short roll setup. I know there is, but unless you studied it, you don't know what it is. So it's like you gotta. And I don't really know too much what it. I don't really do that. So
Yeah.
maybe there's someone in our group that might be able to help you. But yeah, price action tools trade worked out.
That's right.
Chasing the low, no worries. Chasing the short doesn't work out. So nah, that's right. I don't even remember what is. Oh, shorting? Yeah, yeah, for real. Yeah. I think I'm shorting lows. Nah, bro. So yeah, did you have any Fridays? More Friday trades?
Let's see. Yo, I
Yeah,
had Friday.
shorting is lame. I try to go long, get long, stay long.
Friday
And
was the same thing. So, interestingly enough, a common theme that I'm seeing
like I want to, okay, go on.
is my before market trades are usually green. I don't know what the stat is on it, but I believe they're green. Because you'll see here that I take a nice short here. Well, I'll say nice, you can determine that. But I take a short.
I'm sorry, I can't say it's not because this could have just stopped you out. You're
You're
shorting
right.
the low again, and I've
You're
got
right.
to start being critical, I suppose.
You
Well,
have to
not I
be.
have to,
You have to because I have to
but
learn. Um,
I think I'm not doing my job if I don't.
but yeah, so I don't know why I cut this early. I think I started seeing it reverse, but I took 5.5 points here.
Here's a rolling
Um,
top, by the way.
yeah,
Fuck the shorting the low. Take your shots at the
yeah.
rolling top. I would
So
rather see you lose this
why the
than win
F?
this.
And once again, why the F? And this is where my fucking rules came into play and I didn't follow
Uh-huh.
them. Why the F did I stop myself here?
Um, I don't
Because I
know.
had 20 points. 20, where's 25? 25 is here. If I would have just let it go, I'll tell you why I stopped myself here probably. Because I saw it starting to reverse on me and then I saw the time.
That's fair.
That's probably why I probably got in my head a little bit. I just probably saw the time and I said I'm not dealing with 9:30 bullshit, you
Right.
know. Um, I don't know.
Uh-huh.
I don't know how to trade 9:30.
That's fine. I don't think, I don't mind. This is fine. This is fine. Matter of fact, I think getting out of the trade is the best part of this trade.
Yeah. I
Uh,
just I don't know. I
like
probably yeah, I saw it going and that was it.
you're
So
shorting the lows, brother.
it's
Straight up shorting the
my theme.
lows.
I short lows.
Yeah.
So whatever. We took
Shorting those.
5. It was a green trade, but it just wasn't a great trade.
Yeah, Patrick makes a note that it would have applied to yesterday's trades pretty well. And the legs I was talking about is when the higher time frames are in an uptrend, he only, instead of looking for a max of three legs, it's often that rule of three where it's like we finally get the big third leg
Yep.
and then it's done. But he says instead of looking for that third leg, he looks for just two legs. So that's something to think about too, to perhaps keep yourself more aware of the legs going on in the market.
Hmm. Okay.
So yeah, I think stop short in the lows. Again, I always look for how the market's trying to screw you, and how the market's trying to screw you is by baiting you into a low just to pop it immediately, just to then roll hard. It's like you
Yep.
have to wait for the pop. You've got to wait for the pop because the market is trying to screw people. It's a liquidity collecting machine for real. Like that's what it wants. It wants to capture up the liquidity and it wants to find a bunch of people, and most of us are the same, so we put our orders in the similar spots because we're a bunch of sheep. That's just like humans. Like it's just the bystander effect and all the various biases we all have. Like it's
Yeah.
so yeah, you got to stop shorting lows.
Look.
Um, yeah, right. Because here it's like, and it's like eventually, man, it's like you get this leg down and you get this leg down. And then finally we get this, and I mean, I don't even see a good trade at all here. I don't see a long or short, lower high, lower low, lower high, lower low, lower high, lower low, I guess. And then kind of actually, I guess this could be the structure break. This could be the structure break here. But then that gets rejected. This maybe, like we're holding over the 10, sure. and then it's like okay, lower low, but breaks the low of the day just to come up. That's a bull flag. This is the bull flag here. So breaks the low of the day just to come up and bull flag, hold the 10. You've got definitely some short bias going on. I feel like almost was it there before, or have you talked yourself into it? I don't know.
That I don't know. I know I had short bias. Like I think it's the second week of this. I think I said I had short bias.
Yeah. Well, yeah. Oh, yeah. Did you track your trades? How many longs and shorts you took and stuff like that?
I can run the stats on it. I don't need to track them.
And run the state. You can see how many longs you took, how many shorts you took, and what the wins were.
The wins I don't know, but I can tell it'll tell us. Let's see here. This is oh God. What was this? 24 to 31.
Yeah, this is typical for like it's just trade direction 30, right, but it can't tell you. So here's you got to track it anyway,
Okay.
because you don't know your win rate
Oh,
across these
on which one? Yeah, yeah, I see what you're
on the
saying.
short or the long. Yeah, you just don't know your win rate. You got to track them. So yeah, this will be considering this has been basically just a 2 hour chat session. This will be 4.5. Because we got to start tracking. I remember Semper was pretty hard on me about that. He was like, did you track them yet? And I was like, no, I forgot, but I have them all categorized and I can track. I can do it right now. And I'm like, you gotta, your least successful trading time is 8 a.m. to 12. See that? That's because the week was bad. Actually, this is interesting. Actually, can you from trade go to your previous week? Go to a previous one or anything. Wednesday. That's like Wednesday seems to be your best trading day. Do actually your whole do this. When
I'm
did
gonna
this
go.
account start?
We're not gonna include the first couple weeks.
Oh, were you going crazy? Were
Yeah,
you
you
like
want to
up
see
and
it?
down? Up, yeah, yeah. Let's actually take a look at the first.
When did we start FMW? Was it the
Um,
ninth? Was it?
you wait, but why? Because I thought you were trading pretty regular those.
I was, but this account was very new back then. So this was what I think this is what it
This
was.
account was very new or wasn't?
It was. This one
Oh,
was.
okay.
So you see these first 2 days here?
What I'm actually looking at my account here to see to look at my. Oh yeah, okay. So you took a big,
Yeah.
big fat red day, and you took a big fat green day. Okay, so I totally see. And now
I
our
had
first.
started I had started this account to use for FMW, but I started trading it like a week early just because, and I think I was doing 10 micros here. So this is
Good,
when we
good,
started.
good, good,
I think we actually had our first
good,
meeting here, and I was like, I'm gonna start FMW trading here.
good, 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 good. Questionable. Good, questionable. All right. So, what you got to do is, I think, take a look at why. Actually, on
Oop.
your days, actually go back down there. Take a look at why what you let happen this day.
This was
Um,
stop loss moving this day. I remember clearly.
okay, all right. So never do that, right? And you already
That
got that.
was,
You
yep.
already got that down, right? So never do that. And then these were taking too many trades. And trading on FOMC week. So literally, so all right, so yeah, let's look at some stats. Let's look at the 6th to the 24th. And we'll do some stat breakdown. So October 6th to October 24th. Yeah, up in this thing. All right, this is fucking juiced. Most of your trades go at least to your T1. Average when did average loss really? Okay, so most of your trades go to T1 and then retrace. Um, but you're still profitable because you're winning most of your trades. At well, 66%. Um, can you disclude certain days?
I don't think so.
Uh, I don't think so either. I don't think you can. Yeah, whatever. I guess it's the least profitable. Yeah, because it's like this. And that's just the problem of these bad days. Is like they just f all the stats up.
There
Um,
is a while you're doing that, you can still see this screen, right?
no, I can't actually. This
It,
screen disappears when you open up a new tab.
oh,
Oh
okay.
yeah, I'm still looking at this screen. I still see your trade of eight.
All right, I want to see something here real quick.
Okay.
There's another trading journal, um,
Yeah, there's plenty.
in within that may let us pull those stats, but I gotta
Most
log in.
profitable trade Wednesday. This makes sense because it's actually I got some funny stats, but most of the days are actually bullish, right? And Wednesday and Thursday are the only days that are 50-50. So, um,
Uh,
this makes sense.
I wonder if this will help us. I don't think so.
Um,
Hold on.
Interesting. So you win most of your trades, most of them come back. You win most of your trades, most of them come back. Your average win 61, your average loss is but even these stats are screwed up by this day. Even these stats are screwed up by this day. Because
Yeah.
you had 25 losses, um, but two of those were like $250 losses. So, and your total loss this whole time was you went up to like 5-3, 300, and then you lost maybe 200, or you expended maybe 200 of that. So you had like 200 L, and then you had like, but that's tough because 25 of them. I mean, I could just pull out the calculator. Oh, well, I guess your average loss should be 20 times. I don't know. That's tough. That's tough. See, and that's why these big days, these big nasty days that can't be excluded, just really F the stats. But the important part is that you win most of them, and they're often coming back to you. So we're still in that position.
I'm wondering if I don't know if this is gonna show us in here where we can exclude that day.
Do you can you like import your, or do
Yeah,
you,
this I already imported it into this.
oh really, you, okay.
But it's weird. It's not showing me what I want to see.
Uh,
I know I imported it unless I.
is it maybe like an
Oh,
account
it's
filter?
because we're in back testing. Hang
Oh
on.
yeah, that makes sense.
Here we go.
Okay.
Uh,
Um,
this is not gonna let me pick days, is it? No. Okay.
Maybe these stats are better. Are you looking for the date range first?
Yeah, well, date range is here, but it doesn't let us pick. I mean, we
Yeah,
could do it if you want to see it. We can see what it's got to offer. I just subbed to this just to see like what else. I really wanted something
yeah,
good for back testing, but
yeah.
um.
I do think the
Oh, here we go.
TradeZilla
Here we
is
go.
more
Here we go.
good.
Here we go.
Oh, sick.
So
Oh, but this would include your first week.
we could
Okay.
change that. I think we could filter it and then change the date range.
Okay.
So let's do like Monday. Ooh. Well, do you want to include that Tuesday or no? Oh, so you want to select that individual day.
I want to take out
That
whatever that 13th was.
so we'll just do not Saturday. Hit apply, and then we'd have to.
It was the 6th to the
The
24th. And we didn't want the 13th. Oh, actually, was it Monday or was it
it
Tuesday?
was Tuesday. It was the
Okay.
14th. The issue
I'm
is though
sure
is
you
it's
remember.
gonna it's gonna exclude all the Tuesdays though. That's the only issue.
That's fine. We'll take the hit on those and we'll look at the data. And this excludes. Yeah, all right. So this is at least, wait, the 24th. Did we already take out the FOMC week? No, that was month.
This is last Friday. This is a week ago from this past Friday.
Okay,
You
all
want me to
right.
include? You want me to include FOMC or
No,
no?
no, 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 that's fine. All right. So interesting. Even without, oh, well, boom. Now you're at least 1 to 1. By taking out that day, you're actually 1 to 1. Your win rate is still above 60%. Your profit factor is good. Above 1.5 is anywhere between, I mean, obviously you want above 1, but
Yeah.
above 1.5 to 2 is good. So all of that is good. Um, Trade time performance looks like no correlation. Actually, no, that's just because you won most of your trades. Okay, so no, looks like no correlation. Um,
There are other
uh,
things we can. Oh no, you can't. I think there's other things we
um,
can put in here too, but I don't. I'm still getting
yeah, I
used.
kind of want to get TradeZella.
I was up in the air between this and like FX replay. I was really trying to find like some sort of automated back testing thing, but I
Mhm.
probably don't really need it. And this honestly just uses TV, so it's like it uses
Yeah.
TV as its trade replay or its back testing. So it's just kind of
Ah,
like I don't know.
yeah, yeah.
But yeah, I don't know if I should keep it or I just keep using the Tradeify stuff.
I mean, I guess the only thing that I wanted to see out of this was just to filter out that day. It
Yeah,
looks like there's a Zella recommendation up near the top, or was it near the bottom or something? It looked like you had a no, it's somewhere on this page, I thought. Was it maybe it's
trade duration, trade performance.
mm,
I know what you're talking about because I saw it myself.
yeah, was it in the filter?
Um,
I swear, no, it wouldn't have been in the filter. Yeah, Zella Insights. Okay. Yeah, select all. Let's see what it does. See if it shows us anything. Maybe you gotta scroll down. Is it near the bottom? Okay, so
Scroll down.
that did nothing. I don't
It's
know.
a filter, so I don't know what else you could add to this.
Yeah, for real, I have no idea. I guess maybe you just don't have enough data. I don't know. But
Yeah,
your win percentage, I mean, if you look at this freaking hexagon,
yeah.
um, if you look at this hexagon, win percentage, nice. Because 60% is good. Consistency, nice. Max drawdown, nice. Recovery factor, nice. So, and then it's like, how can we work on this? How can we
Yeah.
work on the average win loss without screwing other things? I guess the most important thing is to stabilize.
Yep.
Um, and given these stats, you are stable. Um, So, and I think that's, I'm really glad we could exclude that Friday and include FOMC because this proves it. So, oh, I see you got the window edition thing here. Is this way you can edit what's on TradeZella?
Yeah. So I'm wondering where we would. Oh, we can add widgets. What kind of widgets do we
Oh,
get?
we're
Oh,
adding widgets. Any new?
average win percentage, average win loss. Sure, we'll
Sounds good.
insert
Yeah,
that. Daily
sounds good.
okay, I don't need calendars. Any more calendars? Reports, yearly calendar, external links. I don't even know.
That's awesome. I think this report would probably be pretty cool once you know what you're looking for. Oh, average win, average loss, average win percentage. Interesting. See, this is interesting because this says that your average loss is higher than your average win. So I'm confused. Um, win
These are up to
percentage,
2030. Yeah, I don't.
average win, average loss. Okay, that chart is confusing to me, but maybe it's yeah, I don't know. All right, so yeah, I mean that's what we're seeing is you're at least right more than you're wrong on a 20-point scale.
Mm,
But the problem is it's hard for the market to run over 20 points. So one thing, now I'm biased. I can only speak from my own experience, but I would say one thing you could do is try to tighten the stop from 20 to like 15
yep.
or 12. And that could allow you to increase this as long as your win percentage doesn't drop too bad. Um, because it's very easy for the market to go like, 12 and then like 15 and then like 17 and then it's like, will it get past that 20? And then since you're only risking 10, once it gets to that like 17, even if it comes back to your 12 or whatever and you just cut it, it's still above 1 to 1. So, but then that requires that you tune your trade so you can actually take a 10-point loss instead of a 20 without it getting too bad in the win percentage.
Hmm.
So that's something to think about. Um, or I think you could take less trades, try to catch the proper trend turns more often,
Yep.
and then perhaps once a trade, if you enter, once it starts going in profit, instead of going break even, maybe once you have 20, trail pretty close to 20. Like, because I we definitely saw a bunch of trades. Like if you really want to get down into it, those options, I think you could go through all of your trades. Definitely keep at least a screenshot of the whole trade day
Yep.
every day, because right now you've lost those other weeks of execution, right?
Right.
So you definitely want to keep those because you can learn from your own trading. Because another option to increase this average win loss is maybe you find, oh, there's an insight.
Whoa.
Whoa, whoa. Oh, let's go. That's what I'm talking about. All right, so you still have this data. All right,
Yeah. Yeah. That's interesting.
let's go. So you need to look through. I mean, if you really want to do this shit, it's like everybody has to look through their data or else they're just like flying on intuition and stuff. And
Yep.
that's, so if you really, if you want to outwork other people and be a cut above them, go through your data because most people aren't. Most people are trading on like Tradeivate and then their data disappears the next day and they're like, whatever, I'll just figure it out again. So if you want to be a cut above other people, I really think that, and I'm just regurgitating what other
I could take notes too in
um
this daily journal.
yeah,
All
if
right.
you really want to go hardcore. Um, so yeah, I would look at what you should look at. So we're thinking about improving. So you've got a 66% and it's right about 1 to 1. And either this needs to go up or this needs to go up. One of them need to go up without wrecking the other one too bad. All right, and it's this yellow sucks, but red is, I'll do dark green like a toad. So you could decrease your stop and try to keep the win rate.
Mm.
That's what I did. That was my method. So my win percentage, including all of the questionable days, is about 50%, but my average win to loss is about 2 to 1. Right, so you could do that. And
Yep.
then your options are stop decrease or review your trades and see how many go. Like if you entered long here, and then we're just gonna say like 20 points. Um, see how many even give back 10. So option one is the initial stop. Option two is your trailing stop. If
Okay.
you want to be systematic about it.
Hmm.
Option two is your trailing stop, and you see, do I need to trail tighter or less tight? So it's like, see how many trades come back to your break even
Hmm.
and then go to your stop versus how many come halfway and then continue. Like, so what I've done is I implemented the stop thing and I implemented this trailing stop thing because my stop loss might be break even, but actually I have a mental stop that says if it hits another level, then I will get out of more on a bounce. You see what I mean?
Gotcha. Yeah, yeah, I see what you're
So
saying.
I'm not, and then sometimes I'm wrong, and it just whatever, um, but yeah. So you got the stop, you got the trail stop, and all these solutions are stop based because your stop and your entry are the only things you can truly control in the market,
Yep.
like ever. So what Semper would say is you need to get laser entries. Now that I'm thinking about it. That's that's
Yeah, we're
that's what
trying.
Century would say. So, but I mean, laser entries, come on. I mean, maybe you can. So, um, and then, but then if you have laser entries, then you can decrease your stop, right? So, um, definitely if you can get laser entries. So, yeah, I think should the look at all of your trades, look at all of your winning trades and all of your losing trades, right? And see how much how many times your winners actually went against you more than 10 points,
Okay.
right? And then see how many times your losers went against you more than 10 points and then totally gave up. That sort of thing. And then look at your winners and see how many times you could have trailed tighter or you should have trailed looser, right? Because if most of your winners fall from 20 points profit to 10 points profit and then straight back down to break even, well, then the trail should be 10 for your style. So definitely I would look through these because if you look through these, the point, like I said, all the way back when I said the 20 point is that the point of the 20-point stop is to stabilize so you can get consistent data. And now you can start tweaking that data. And those are kind of the options that I have gone about doing them is
Okay.
those things. So yeah, I think this is awesome.
Nice. All right.
Yeah, so I mean
I
that's
didn't
about
know this.
all.
I didn't know we had this, so I'm gonna start journaling here.
Yeah, there you go. And that's about all I think I've got floating around. I think I've ran it a damn good bit there, and I think that's probably all I got so far for those. For unless anything else comes to your mind, I think that's pretty much everything I have there on how to
Okay.
improve some of the lessons. Um, price action tool. Yeah, use your price action tools. Don't chase the third leg. No FOMC. Day trading. All-time high is hard.
Yeah.
Don't be chasing shorts or longs. And then yeah, tweak this data. I would say really like smoke a joint. I'm kidding. I don't think you should smoke. Um, smoke a joint and then literally just go through all of these days with like a hypothesis, like a fucking scientist.
Yeah.
Like make a hypothesis and test it out.
Okay.
So that's pretty cool. I really don't let the last week. Now I feel like now I'm just kind of saying point after point, but don't let last week fuck you up. Fuck that shit. Last week was yeah, one of the hardest, I mean.
Okay.
So,
Sounds
all
good.
right, cool. Awesome. Hopefully that all helps.
Yeah, it should. It should. New day tomorrow, so it should.
Ooh, what'd you say?
I said new day tomorrow, so it should.
Yes, new day tomorrow. Tomorrow's Monday, and tomorrow's my first day as a full-time trader.
You're gonna be fine.
And let's go. All right, so I'll wrap up this recording. I'll close this recording here. That's the last thing. I think this is awesome. Ton of nuggets. I think anybody who actually watches this whole 2 hour, 20-minute video and checks out, even if they straight up just skip to this last 10 minutes and record those nuggets, I think this will make them a better trader. So I think this is a long one, but a great video. All right, I'm gonna close this one up. This is yeah, Final Way season 6. We're gonna do 4.5. because it's way too long, perhaps, and then and because I just want to do more episodes, maybe. So I think you're doing good, and we're looking forward to see how next week goes. Let's fucking go.